Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's Deep Dive. It is August 30th, 2018, and tonight I'm going to be talking about the Dow Jones. I don't have it listed on this particular Deep Dive, so we're going to use the S&P as the proxy. But for all intents and purposes, the trends are all to the upside in the Dow. The technical rating, I know, is to the upside, but both in the S&P and the Dow, we had pivot highs recently. And so what I'm going to do is spend a little bit of time on the Dow just to show you specifically what is taking place. We had a nice little sell-off here in the Dow today, and just recently we did have, just maybe not today, but a couple of days ago, we had an elastic high, which was kind of telling us that the market was a little bit ahead of itself. Now, many times when we get this elastic level, it is premature and we're just simply on hold waiting for something to take place. And so it doesn't always happen that day, but it does put you on notice that the market is obviously overbought or theoretically oversold in other cases, but overbought in particular cases and looking for the market to sort of retrace. I just want to point out that we have a number of support and resistance levels. The one that is in key play right now would be this one along with this one over here. So I'll give you these numbers. So for the Dow itself, since that's what we're going to be talking about, is 25,813 is the level. So it's got a little ways to go to the downside if it's going to find some support. Now what we're going to be looking at, for the most part, in this particular presentation are the systems, because I love when the systems do what they're supposed to be doing. When the market is rising, we take put ourselves in a position that the systems start to leg into more and more systems, and we're able to leverage things up and take advantage. And then when markets start to reverse course, we're able to sort of protect ourselves. So I just want to give you an idea as to what is taking place right now with the systems. We have a long, a short, a long, a long, a long, and a short. So obviously we've got 4 longs and 2 shorts that are setting us up here where we have a long position out there, but we had just recently a short position that triggered today, and we had another short position that triggered yesterday. So what is taking place is that we are reacting to what the market is giving to us. You can see that a lot of the systems have a nice open position profits based on having entered into positions on 813, 813, 817, nice open position profits. Today, being the 30th, we have a short position that opened up. We got a little bit of a profit, obviously having given back some on our long positions, but we're hedging ourselves a little bit here. We have a little hedge position on this short position out there, and so what is basically taking place is that the portfolio, and this is the key, because we're not a one-trick pony trading a single market with a single system, we are trading multiple markets, and then when we look at a market, we have multiple trading strategies, both on different time frames and different trading strategies that we're able to take advantage of whatever the market should throw at us. And so we have a nice open position profit. Yes, we are net long the market, but we're in the mode of protecting ourselves with some short positions. The other thing that has taken place is that we've had in the last couple of days, one today and one yesterday, a couple of long positions, 240 long and a 60-minute long, that liquidated themselves. And so I want to pull this up here so you can actually see what has taken place. This is the trade that took place yesterday where we were long the market. There was a thrust. We take advantage. The market thrusts up again. We're able to take advantage of this in the S&P 500, making around $1,000 or so here. And then we had the other trade that liquidated today that had been in the position a little bit longer. This was around $1,500, where we were able to liquidate the position before the market really started to tank. Did it sell off? Yes, but we got out of our position before the market tanked here, and obviously we got out well in advance of the market selling off the other day here. So we have had many instances just recently where the systems have been able to react to what the market has given to us, and we're in a mode right now of being able to protect ourselves with multiple shorts, two of them, helping to offset some of the losses that we're having here with the long trades. We'll see what actually does take place with the market, but as a whole, if we come back over here, you can see that this threshold right here, it would not be uncommon for it to come back down to this threshold, and then we can react even further by theoretically adding more short positions, unwinding some more of our longs. We find some support, we unwind the shorts, we can potentially go back long the markets. A lot of options that are ahead of us, but the reality is that when the market has these bullish trends to the market as we've had, we're able to take advantage of them throughout the phase based on multiple time frames, and that's really the key to this particular presentation, because I love when the systems react the way that they're supposed to, taking profits, hedging our positions, looking for other opportunities, finding support to the market. Those are the key things that we're going to be looking for, and that's exactly the way that the systems are playing out here. The other thing I'm going to point out, different topic here, is that I added some new content as of late, and this is information related to monthly and weekly, although this particular presentation only deals with the monthly, but I add a little video that kind of describes what is taking place with some new content. It's looking at monthly CVAR, which is a way of which we can evaluate a market so that we can know on a relative basis, is a market looking at major returns or minor returns. What is a big move for that particular market? So the bottom line is that under our video blog, what you can do is you can take a look at this new content, and you'll get a little bit of a description here. And if you want to actually see what the chart looks like, we have it here, and the way you would get to it is to go to Performance, Distribution Analysis, Monthly, and we do it for weekly as well. Monthly, in this case it's CVAR monthly correlation. I won't go through CVAR, not correlation, but CVAR comparison. I'm not going to go through what all this represents because there's the video that's out there, but do take a look at that. We added that so that people can have a relative comparison for what is a big move and where the market is within that big move, as to whether or not there's a real look for and a real honest to goodness percent return that constitutes on a relative basis something that is big or small. So bottom line is there's another video that's out there, some new content that's out there. Watch the Dow, watch and see how that thing's going to react with that support level, and watch how the systems on a 15-minute bar basis reacts to what the market is doing. That we update things on a 15-minute basis because the systems, the common denominator is on 15 minutes. Watch the markets, watch how it reacts, and hopefully you can appreciate the portfolio effect of multiple systems on an individual market. So thanks for watching, and we will talk to you tomorrow. Bye-bye.